Let's discuss Federal Employee Group Life Insurance, also known as FEGLI, to include definitions and the various options associated. FEGLI is comprised of 4 options: Basic and options A, B, and C. Basic must be elected to add the options. The basic death benefit is determined by the annual salary rounded to the next thousand and then add $2,000. In this example, you will see the basic coverage is $74,000. There's no maximum dollar amount for the basic coverage. It is strictly dependent upon the employee's salary. Next, we'll define the 3 options, starting with option A. Option A is an additional $10,000 of coverage on the employee. It's just that simple. Option B is additional coverage on the employee determined as a multiple of 1 to 5 times the annual salary after the annual salary has been rounded to the next thousand. From our previous example, if your annual salary is $71,285 and you elect a multiple of 5 times, then the option B benefit would be $360,000. Option C coverage applies only to family members, specifically the spouse and eligible children. It does not include any coverage on the employee. Option C on the spouse is in increments of $5,000 for multiples of 1 to 5 as well, for a maximum coverage for a spouse of $25,000. Each eligible child can have coverage in increments of $2,500 with the same multiples of 1 to 5. So the maximum amount is $12,500 for each qualifying child. The cost of FEGLI Basic is shared between you and the government. You pay 2/3 of the total cost and the government pays 1/3. Age does not affect the cost of basic insurance. However, the employee pays full cost for the optional insurance you elect, and it is dependent upon your age. We have covered the definitions to help understand FEGLI Basic, option A, option B, and option C. Now let's discuss your choices when you transition into retirement. What decisions will you have to make when you submit your retirement paperwork? In order for you to continue FEGLI Basic into retirement, you must meet the following: retire on an immediate annuity, you must be insured at the date of retirement, and you must be enrolled in FEGLI at least 5 years prior to retirement or since your first opportunity to enroll. We will discuss FEGLI Basic coverage in retirement first. The cost structure per $1,000 of death benefit for FEGLI Basic will depend on which choice is elected at retirement. This slide only pertains to FEGLI Basic coverage. We will discuss options A, B, and C momentarily. There are 3 choices for FEGLI Basic in retirement: no reductions, 50% reduction, or 75% reduction of your death benefit. The FEGLI Basic premium in retirement is comprised of 2 parts. You pay the same basic premium just as you did while you were employed, plus you pay the cost of the choice elected at retirement. The no reduction choice is the most expensive, and the 75% reduction choice is the least. At age 65, the basic portion of the premium goes away, and the premium for the choice elected will remain. No reduction choice is fairly self-explanatory. Whatever FEGLI Basic coverage you have when you retire never reduces, thus maintaining the same basic death benefit until death. The 2 other choices are 50% reduction or 75% reduction in the basic death benefit. I'll explain the 75% reduction because it is the most common choice elected at retirement. The 75% reduction option works as follows. You pay for the basic coverage until age 65, but the 75% reduction choice is free in retirement. So at age 65, all premiums will end. You no longer pay for the basic either. So your FEGLI Basic premium with 75% reduction choice is free after age 65. However, at age 65, the death benefit reduction begins, and your basic coverage will start to reduce 2% every month until it reaches 25% of your initial basic death benefit. Next, we will discuss the choices available for option A, B, and C in retirement. These choices will be elected as part of your retirement paperwork. Option A, if elected to maintain in retirement, works very similar to the 75% reduction on basic. You have $10,000 of death benefit at retirement. You pay the premiums for that $10,000 of benefit. At age 65, the premiums end totally, and the death benefit will begin reducing 2% every month until it reaches $2,500. The $2,500 that remains will stay in place until death. Option B and C, if elected to take into retirement, has two choices, either a no reduction or a full reduction. No reduction is just that. You elect to keep the full death benefit in retirement with no reduction of your death benefit. The cost per thousand increases for every 5-year age bracket until the age of 80. At age 80, the cost remains $5.20 per $1,000 of death benefit until death. Your second choice, if you elect to take option B and or C into retirement, is full reduction. For full reduction, you pay the premium until age 65. At age 65, the premiums end, and your death benefit begins reducing 2% every month until it is totally exhausted. Therefore, there's a linear decrease in your death benefit until it reaches zero. The chart you see on the screen illustrates an example of the cost structure for FEGLI Basic with option B and a multiple of 5. This information also shows the cost while employed and in retirement with no reduction elected to illustrate the cost variation while employed and in retirement. Several 5-year age brackets are shown. As you can see, the cost for FEGLI coverage can become quite expensive. Regardless if you're a new employee or near retirement, comparing the cost of private life insurance with FEGLI is well worth the time. Knowing the options and planning accordingly can save substantial premiums over time.